to BizTech's Wealth Conversation Show. Our guest today is Derrick Tan, Chairman and CEO of WRISE Wealth Management. Now, Derrick, welcome to the show.
Hi, Brian. Thank you for inviting.
Before we move ahead, tell us about WRISE Wealth Management and its history.
WRISE Wealth Management is the new startup. Yeah. So although in the wealth management space, but the objective of WRISE is to use technology to help some of the family offices or the ultra high net worth individuals that are managing their accounts across multiple banks. We have a proprietary system called Track that will be launched soon. And that system itself is what we have built, called Wealth System, designed for family office.
Okay, so tell us about Track and the team that you put together to develop this solution.
Yeah, so there is a lot of, even banks have systems. So you might ask, Derrick, why all the banks have banking system? So why do we need Track? But if you know family office and ultra high net worth individuals, the bigger you are, the more banks you have. So imagine, you are in your private jet, there's a black swan event happening, and you have to navigate your wealth through maybe 10 private banks and 5 financial institutions. Maybe you have a direct investment with some of the PE or hedge funds. So in today's wealth management, it has been beyond just private banks. So every bank and every financial institution has their own technology systems. But imagine as a family office, you have to navigate through 12 to 15 systems just to look at your exposure. Hence, the evolution of family office, and people are hiring a lot of professionals from either ex-finance or banking sectors to serve their needs. But if you look at the numbers of the explosion of wealth or family ultra high net worth individuals, they are expecting the number to double in the next 4 to 5 years. One thing I can feel is the supply of talents won't be able to meet the demand of this evolution of family office. Hence, the only way to bridge this gap is through technology. That is why I've decided to step out of my comfort zone. And when I saw this gap, to build WRISE and to build the system Track to serve the family office. Yeah.
Derrick, in my really simplistic terms, what I understand Track is really around an aggregator. I have 10 relationships with different banks. I can basically, through Track, have an aggregated view of all my portfolios across different banks, different exposures, whether it is cash, whether it is stock portfolio, whether it's structured products. I have one view. Is that correct? Is that the value proposition for Track?
That is about a 10% value proposition.
Okay, please tell us more.
There are systems in the market that aggregate all this data, but they only aggregate the data. So Track is able to have what I term it as a call to action. Mm-hmm. So immediately from the same system Track, you actually can, as I allocate, sell, invest, buy, hedge your position. You do so, but presently what's in the market now, there's information, but then you still have to contact the banks. You still have to check which bank is holding which position. And imagine if 5 banks is holding that position, you need to call 5 different banks. So from our perspective, right, the system will take care of that. Yeah.
Okay,
So
that's a huge time saving and potentially money saving as well, because if you need to act quickly in a black swan event, for example,
yes,
it's almost instantaneous to 5 packs.
yeah, almost instantaneous, as long as the person controlling it decides to do it. Yeah. And the other part of track, which is unique as well, is we also encompass non-bankable. So my definition of non-bankables are arts, your private jets, your yachts, your clients with beautiful watch collections,
your classic car collection,
classic cars, your California GTOs, your LaFerrari, whatever, So if today a LaFerrari, I think I remember the last auction, maybe about 11 million US. You cannot tell me that's not worth anything. Yeah. So to me, that is whatever the clients value and cherish is what RISE will value and cherish, because we are now behind with the clients. So the whole system is able to encompass even the non-bankable. And the non-bankable part, I do not just use valuation based on what clients tell me. If they, for example, today he has a beautiful art piece, and he feels personally this art piece is worth 15 million US. I will not put in 15 million US. The non-bankable portion, the valuation, right? What I did was, right, I've worked with some trust companies, and we use the trust accounting standards for the non-bankable part, which also means that in the future, if the client wishes to have their whole trust within track itself, it is also possible. It has been designed to encompass total wealth, even real estate, everything.
And that's really, really interesting, because one of the key things, obviously, and you being a wealth management veteran, is the fact that money and high net worth individuals seem to be getting younger and younger. And obviously, then this is a space that they want to be in, because they want to control, compared to perhaps some of their older high net worth, ultra high net worth individuals who perhaps have traditional relationships that they use.
Yeah. So two things is happening, Brian. Okay, firstly is what you mentioned, right? Recently, most of the billionaires, right, came from tech companies, and tech companies, normally most of them are below the age of 40s. They became they make their first $1 billion. You were mentioning about the old money, but the old money is also going through a wealth transfer. Whether the second, third, or fourth generation, or some of them I've seen even 10 generation, and people taking over are also in their 40s. So this convergence, these two groups, right? Technology is something they are used to. They know technology equals speed, equals real-time data, that equals fast decision making, and that can make and break a portfolio.
So here's the thing, Derrick. Again, with all your insights over 20 years, 20 plus years in wealth management, one of the key things is the risk appetite for these people is different, isn't it? Because the younger tech entrepreneur billionaire is very different from an intergenerational fund wealth transfer to, say, as you said, third, fourth, even 10th generation, where their risk profile is very different, more perhaps to wealth preservation as opposed to wealth generation. Could you shed some light on that in terms of those key differences?
I think for RISE value proposition, right, that was something we decided in the beginning. Everybody wants to grow money, be it the old world or even the new world. So when you grow, basically you preserve as well. But if you only preserve, right, basically you're flat.
Yes.
Yeah. So we rather just focus on growth. Because when you grow, you preserve. Yeah. And you're right. The risk appetite varies from people to people. But I have also seen new money when they make their first $1 billion. They actually have decided to cut their wealth into buckets, very similar to how the old world designed it. And the way I look at it, whether a client is risk on or risk off, right? It always depends on. I look at it, right, especially now in the down market, people holding cash are starting to get risk on. Because valuation, everything are looking extremely good. The last few years, the evolution of private equities, has a lot of people have made a lot of money. Even the old money, know what is a Series A, B, C. They understand. It is not confined to you have to be very taggy to know what is a Series D, what is a Series E. So it's very interesting. I think this convergence, right, is because of information flows. I think it's because of companies like yourself, BizTech Asia. You are basically bridging this gap, between information and technology, and the convergence of I think risk appetite is really dependent on markets. I mean, if today most people will not go into high yield bonds, they will go more into convertible bonds or CTAs.
Yes.
Because of the market.
Yes.
It's not because of their risk appetite.
What are some key trends that you see right now in the wealth management space? And I can highlight two that perhaps you can elaborate on. One is that increased wealth flows into Singapore and the increased setting up of really high net worth family offices in Singapore. The second thing is, of course, then, which we see very much particularly in the last 12 months, is a movement of Chinese and Hong Kong money increasingly into Singapore. What are your thoughts on these two trends that are impacting Singapore?
Man, I think the Singapore government came out with this family office concept, I think quite a while ago. I can't remember, maybe 6-7 years ago, one of the forerunners in that. And I think the early investment into that education has actually paid off for Singapore. The evolution of structures like BCC in Singapore has made it very easy for family office to operate and build what they want to build. But that doesn't mean that, I think personally, that doesn't mean that all the funds are just flowing to Singapore. I've seen a lot of funds also flowing into Hong Kong as well. The government has introduced similar program, but under different names. They call it OFC and LPF structures. There are also family office in Hong Kong as well. And I think different people have different needs and different purpose. Yeah. But I think what is good is, right, I think be it Hong Kong or Singapore, I think what you can see, the wealth flows, as I shared, is because of the wealth explosion. I think in the next 5 years, right, whatever we see today is going to double again. So money will continue to flow. So be it Singapore, Hong Kong, be it Liechtenstein, be it Luxembourg, even Delaware, money, anything that has a very open financial model, any country that embraces that will actually get these flows. Yeah.
Now, Derrick, what else do you see in terms of the future of wealth management, and how is RISE going to ride that wave?
I think the future of wealth management, especially for the demand of family office, will be much higher. I think real-time data is a minimum. I have been, when I was still in banking, I was invited to many family office, and this family office have invested in the most sophisticated business you can think about. Even SpaceX, everything, they have a bit of investment. But interestingly, the whole family office is run on Microsoft Excel spreadsheet. They don't have real-time data. So RISE value proposition with Track, right, is to bridge this gap. We are API to all the top banks. We are API to all the top IVs. We are API to be it Bloomberg or Reuters. We are API to all the custodians in the future. And basically what that provides is, right, real-time access for the family office and the clients.
Derrick, it's been a fascinating conversation. Before we leave, any final thoughts you'd like to leave us with?
RISE value proposition is very simple. I think just 3 words, right? Wealth made easy.
Now, that's a very easy thing to leave the show on. Derrick, thank you very much
Thank you.
for coming on the show.
Thank you very much. Thank you, Brian. Yeah.
We've been speaking to Derrick Tan, Chairman and CEO of RISE Wealth Management. I'm Brian Fernandez, and we've been listening to BizTech's Wealth Conversation Show. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.